can give me 15 minutes of your time, I'll show you guys the power of the third 6-hour candle. Understanding the daily time fractal is the first thing. A full trading day is one candle, guys. That one candle follows a sequence. So it will always follow that sequence: open, low, high, close, or open, high, low, close. You guys can see up here, open, high, low, close. It's there every candle. So this is not something that, you're making up. This will be there every single candle. Open, low, high, close. Inside of that daily candle, we don't need to guess. We can fractalize that. A day is 24 hours, right? So you break that down into 4, since we have open, low, high, close. That's the fractal. So you will have first 6-hour candle, second 6-hour candle, and third 6-hour candle, and fourth 6-hour candle. And then your daily candle closes. Does that make sense? Each one has the purpose, though. The third 6-hour candle is where the intent is revealed, okay? That's where the money is showing. That's where the daily move, if it's going to be continuation, that's where the lick will show. If it's going to be a reversal, again, on the third 6-hour candle, it will show you a higher low or a lower low. The third 6-hour candle is powerful because it captures the end of London and the starting of the New York. That overlap is where liquidity and volume is making the decision point. That's where the daily highs are formed, daily lows are formed, or where the market confirms continuations or reversals. When the third 6-hour candle matters the most. The third 6-hour candle is not for random entries, okay? It matters the most on reversal days, on expansion days, and after manipulation. On a reversal day, the market often sweeps liquidity early in the day, okay? And then when third 6 hits, time shifts, and then it will show you guys the intent. So the best example, I'll show you guys right now. This is an example from yesterday, okay? Monday open. What do we get? We have a first 6 open, second 6 sideways, builds the liquidity. You have equal lows here now. On the third 6, exactly on the third 6 open low, what do you get? You're getting that sweep and not gapping down, showing the intent of reversal right on the third 6-hour candle. On continuation days, so like this today is a continuation day, right? So perfect example. So on continuation days, the third 6-hour candle again confirms the direction by pushing through the daily open, by creating new imbalances and new displacements. This candle is where you stop asking, should I trade today? This is where you start to ask, is this the time to trade? Is the right time to trade? Is everything aligned at this point? That should be what's firing in your head when you're staring at third 6-hour candle. Not is this a good place to trade or not? You should be looking at what the intent is. Are we absorbing? Are we gapping down? Are we gapping through it? Then it will show you a lot of things. It will show you a lot of information. So again, coming into this day, right, it looks like we're about to drop heavy, but again, what do? We simply fill liquidity, meaning we fill internal liquidity at the same time taking out these lows here, right? So we sweep these lows plus fill this gap exactly again on the third 6. And you guys can see the first 90, second 90. Again, right with the open low, you get your continuation move going into your third 90, higher low. Same thing here, right? First 90, second 90 sweeps, and then third 90, higher low, pushes higher. Third 90-minute candle fractal. Now we can go even deeper inside the third 6-hour candle. So just like the daily, you have first 6, second 6, third 6, fourth 6. So now in the third 90-minute candle, that is now your fractal of your 6-hour candle, which is your first 90, second 90, third 90, fourth 90 to make up one 6-hour candle. And at these points, right, this is now how you can trim down, like I just showed you guys in here, right? This is how you guys can trim down even the whole 6-hour candle into 1, 2, 3, 4 to make one 6-hour candle. That is your open, low, high, close of your 6-hour candle, which you guys can see precisely it's by time. It's not randomly just doing that. It's doing it precisely 90-minute each, right? Precisely 90-minute each. And then now we close the 90. So now in this example, we fully close the 6-hour candle. Now we're on to the new 6-hour candle, first 90-minute candle of the new 6-hour candle. Again, this candle will go into the same sequence. So if this is going to be rejecting now, then this will open and then the next 90-minute candle will sweep the high and not gap up. Then the third 90-minute candle will start to pull back down into these gap, into wherever we left liquidity there. And you guys can clearly see we have a third 6-hour candle low. That's your time-based liquidity, right? Opposing side time-based liquidity. So if we start to fail, right, with this next 6-hour candle, open high and sweep the high, then our target will become this third 6-hour candle low. Failure model. Here's the concept of the failure model. I don't enter the trade because price is moving. I enter the trade because price is failing. Once again, pay attention to what I said. Price is failing, so I'm looking for entry, not because price is moving. Again, same thing here, right? On the third 6, price is failing to do what? Go down. It's failing. It's failing to gap down past a low. That's what I'm looking for. I'm looking for those no gaps. Instead of rather looking for gaps like most of the people, I'm looking for no gaps. The clean no gap ups and no gap downs is gonna tell me, is the liquidity already been taken, or are we going to get a continuation or not? During the third 90-minute candle, I also want to see fat clear absorptions, rejections, or failure to expand. That's when the order flow is shifting, and that's when I'm starting to looking for entries. Entry confluences. Once time and price align, I look for one of these things, okay? Previous lick retest, inversions plus new gap, new imbalance forming on the footprint chart, value area low, value area high, POC interactions, or divergences. You don't need all of them. You just need 1 to 3 of them to align with time and price. So you need time and price alignment. You need price reacting where it should, which is your time and price alignment level. And you need order flow confirming the intent. Now your stops will go below the third 90-minute candle. If you enter the third 90-minute candle higher low, open low, you'll be entering the third 90-minute candle. But if you're trading the whole 6-hour candle, then you're trying to catch the open low of the 6-hour candle, not the higher low. So then your stops go below the whole 6-hour candle low. So it's really depending on if you're trading the whole 6, or if you're trading the whole daily candle, or if you're just trying to catch one 90-minute candle, which is plenty enough if you're trading in a 1-minute time frame. You guys can see just understanding one 90-minute candle also, even today. If you just caught along on one 90-minute candle, that's a whole ass move on your 1-minute chart. Stops go below, and you just exit with 90-minute candle. Time-based, precisely. You just close with the 90-minute candle. Again, you just close with the 90-minute candle if you're trading the 90-minute candle, right? And then your targets are what? Your untapped gaps from the other side, or your untapped liquidity, but your untapped time-based liquidity. So same thing here. We have untapped time-based liquidity here, right? Which lines with our thesis that we were just saying. If we open high into it, then we will tap this untapped liquidity, right? And it will stop the move for the day. Since now that is your distribution, precisely done for 6 hours. When not to trade it. This is the most important part, okay? When not to trade it are on days like this. Clearly, there is no gapping up, no gapping down, both ways. You're not seeing clear intent on both sides, okay? And if you guys watch, I teach you guys this too. This is the crazy part about time fractals. This is your Saturday. That's your weekend fractal. So again, it lines up with my Saturday not to trade. Also, price action lines in inside of that. You're not getting a good trade inside of here. So again, if price is stuck in a consolidation, and if price is not taking no liquidity and order flow is flat, if the book is flat and time and price are not lined, which is Saturday, then clearly no trade. You skip those days. Okay. And why this model works? This works because markets are not random. Markets operate on time windows, liquidity objective, and execution cycles. The third 6-hour candle sits at the decision point of the day. If you wait for time to shift and price to fail and order flow to confirm, then you actually stop chasing the price and you let the price come to you and you start reacting and you're able to forecast a step forward. If you guys take one thing from this, time is the cause and price is the effect, okay? Time is what's allowing price to open up and close down. Always understand that. Master this third 6-hour candle and you'll stop forcing trades and you'll start trading with intent, clear intent. You guys will see clear view why you need to take the trade, why you shouldn't take the trade, and you have a very good reason, right? And if this helped you guys, replay it, apply it, and then that's how you can build consistency. And if you guys fuck with the video, please leave us up and drop me a like, and I'll catch you guys next time.